Welcome to the Allan Small Financial Show. Thank you, as always, for taking time out of your busy day and spending it with us. We have a really special show for you this afternoon. Well, first of all, it's always special when we have a show on the same day that the Federal Reserve, central bank in the United States, is about to set interest rate policy. They have their meeting at 2 p.m. today, and not expected to do an awful lot like the Bank of Canada. They're expected to stand pat, but it's always great to hear what they have to say with respect to interest rates because we know how important their interest rate setting policy is to the stock market. But aside from that, we have a special show for you today because we're going to take a look back at the year that was. We're going to show you a bunch of interviews that we've had with a number of our fantastic guests. And, unfortunately, too many guests to show in this segment, but we wanted to just give you a glimpse of all the guests that we've had. And as always, if you want to learn more or watch more of these episodes or interviews, you can always check out our YouTube channel or go to my website, and you can get some more information on how to find these videos or these interviews and take a look at them, I guess the whole video versus just a snippet of those videos. So we're going to take a look back. That's what we're going to do to start the show today. Thought it'd be interesting to do that. Then we're going to get into our usual segment, which is our This Week segment, where I talk about what I believe is important for individual investors to consider before you make your investment decisions over the next few weeks and actually into 2024. We're getting closer and closer to year end, so it's important to look at investing in that light. We're also going to talk about the highs and lows that were in 2023. I think they can be broken down pretty simply. The highs, obviously technology, and the lows, I think, have been caused by interest rates and all the economic data that have caused interest rates to move higher. Canadian banks, oil, and gold. As we know, banks, oil, and gold are the three main sectors of the Toronto Stock Exchange. How have they fared this past year? Where does the stock exchange or the Toronto Stock Exchange sit today? How much have we seen in the way of gains as compared to the other indices? We'll touch on that. Top three items that can derail the economic momentum in 2024. Yes, we do have economic momentum heading into 2024. What are three things that investors should be watching for that could perhaps slow down the economy further and derail perhaps the stock market rally that we've been seeing as of late? And lastly, your questions. If you have any questions during the show, during the course of what some of the interviewers or some of the guests are saying during the interviews, please feel free to send me a message through the chat box or send me a message after the show. Be happy to answer any questions you may have. And if it's with regards to what one of our guests have said and in one of the interviews, I'll be happy to go back to them and ask them the question if I don't know the answer. So without further ado, let's get on with the show and let's get on with our recap of some of the interviews that we've seen from some of our great guests over the past year. We've had a number of great guests in 2023, and it was our thought to bring you a little snippet of some of the guests that we've had on over the past year. We've had guests discussing the metaverse. We've had politicians. We've had experts in areas of gold and mergers and acquisitions in the private sector. We've had finance minister coming on our show discussing the state of the economy and the Bank of Canada and how they work. A number of fantastic guests. And what we wanted to do today is just play a few clips from a few of those guests to really just give you the some exposure to the different types of guests that we've had and the quality of guests that we had. And again, if you have not seen the full interviews with these guests, you can go onto our YouTube channel. They're all there. You can go onto my website as well. A lot will be there as well. We have a number of podcasts, Spotify, Apple. You can check out our interviews there as well. And so just wanted to give you everyone just a glimpse as to what we've done in this past year and how happy I am. And again, to say thanks to all our guests. The start of the year, Metaverse was the word that we all were quite impressed with. And today it's maybe changed over to artificial intelligence. But back then, We were hearing about Facebook changing their name to Metaverse. We were hearing about this so-called Metaverse. How can you make money in the Metaverse? Why is the Metaverse important? And is it really the future? And who better to talk to us about the Metaverse? CEO of Metaverse Group, Lauren Sugarman. And he spoke to us about how one could profit in the Metaverse. How can someone invest in the Metaverse? Obviously, you can invest in companies that, such as Meta itself, formerly Facebook, and buy the stock there. But you could also invest, as I'm being told, in, for example, property, real estate in the Metaverse. How does that work? And obviously, when we buy property here in actual land in our world here, obviously land is a very a commodity that is not everywhere. Obviously, most of the land here has been built on. But in the Metaverse, I would think there's lots of places you could buy real estate. And I've heard outrageous amounts of money being spent on land or real estate in the Metaverse. How does that work?
Yeah, so that's a great question, and you're right. There's public equities that one can be part of. Like I said, Roblox. You said Meta, but there's also, as you pointed out, virtual land or virtual real estate, as we refer to it. So today we own over 500 NFTs in places like Decentraland, Sandbox, Urbit, Superworld, etc. That are these digital real estate pieces, and our thesis is quite simple, is that just like traditional real estate, we're there to create a yield. And so we charge people rent to use our land, and we'll create experiences for them.
Metaverse. It was the talk from everyone at that time, earlier 2023. Now I think the talk has shifted a lot to artificial intelligence. So perhaps we'll bring back Lauren and talk to him about the Metaverse again and how things have changed. Another great guest that we've had on our show many times, actually, well, a few times anyways, is Dan Kelly, head of CFIB, Canadian Federation of Independent Business. And we've touched, we've spoken to Dan, I guess, a couple of times, asking him how small business is faring during these difficult times of higher expenses, higher costs, higher wages, inflation, higher interest rates. And Dan's been on the show a few times talking to us about what the government can do for small business. And here is Dan Kelly talking to us most recently. What would be your number one thing that you'd like to tell the government that they should be doing?
Well, number one, my usual advice for government, the number one thing they can do is not make it worse. And sadly, as we were talking about a minute ago, the government seemed to be making it worse, adding minimum wage hikes and CPP AI hikes, carbon tax increases. So they're making the job for small businesses more challenging, not less challenging. Secondly, some strategic changes, lowering a couple of tax rates would be a big help, but even giving more time to repay some of the CEBA loans that were issued, that would be also a big help. Third, and this is something that the federal government is already committed to, is lowering a few of the costs that businesses pay. And one of them is credit card processing fees. A lot of merchants in retail, hospitality, the service sector are powered by credit cards. Their customers want to use them. And those fees, the budget promised to lower those credit card fees by up to 27%.
Dan Kelly, a great interview. And as I said, we've had him on the show a couple of times and always giving us the pulse of small business, how things are going. And as we know, small business makes up much of business in Ontario, in this country. And as goes small business, goes really the entire country. We have a lot of large businesses here, but really, small businesses make up the majority of business in our province. About midway through the year, in the middle of July, I had the pleasure of having the Premier of Ontario on our show. Premier Doug Ford was on our show, and it was a great experience. The Premier was very gracious in coming on our show, dealing with his people and him, and specifically a fantastic interview. And he really was able to shed some light as to how our economy in Ontario is faring. And this is what he said about the state of the Ontario economy. With talk about a possible recession the end of this year, or possibly a recession in 2024, how do you think, or what do you think the state of business is in the province of Ontario?
What I see, the business is just booming right now here. And Ontario. I'll give you one example, and I mentioned all the other premiers. First of all, Ontario's leading North American job creation, economic development. People are investing in Ontario from all over the world, and I'll give you some examples in a minute. But, out of the 60,000 jobs that were produced last month in Canada, 55,800, or let's say 56,000 jobs out of the 60,000 jobs, 93% were created right here in Ontario. That's pretty staggering. And the number of jobs since we've taken office in 2018 is now topped over 700,000. So there's 700,000 more people working today than were working 5 years ago.
When we spoke to the premier, I know that in talking to some colleagues of mine, everybody wanted to know not only what the state of the economy in Ontario is and how we're doing, but everybody was always asking the question, what can the government do to help individuals in Ontario? Obviously, this year has been very difficult. Higher interest rate costs, inflation, higher expenses for small businesses. What can the government do to help individuals and businesses in the province?
What can your government do? What can you do to help these small businesses, to help business in general, or to help the average family in Ontario cope with these higher interest rates and higher inflation rates?
Well, thanks for that. First of all, I understand what the Bank of Canada is doing. I totally disagree with them. They're trying to slow down inflation, and we won't be able to tell the impact for maybe 6 months down the road. Inflation has dropped to about 3.5%. I believe it's going to go down. But what they don't understand is what's happening to the families when they have to go renew their mortgage. The only people that are making tons of money are the banks. When you renew your mortgage, it's hurting families. And really, the monetary policy is a conversation for the federal government to have with the Bank of Canada. It's not our jurisdiction. But in saying that, I'll tell you what we are doing. I mentioned the $8 billion we're reducing off the backs of small, medium-sized companies every single year. We're the only jurisdiction in the entire country that have cut the gas tax 10 cents per liter. That's hundreds of millions of dollars a year. And I just wish the federal government could give people a break on the worst tax anyone could face, and that's the carbon tax.
So again, another great interview from the premier giving us some insights as to what his government is doing in Ontario. And if you didn't get a chance to see that interview and some of these interviews that I'm showcasing today, please go to YouTube, our YouTube channel, website. These interviews are there in full. From the premier, we actually had the pleasure of speaking to his finance minister, the Honorable Peter Bethlenfalvy. The Ontario finance minister was on our show not too long ago, actually. And I really wanted to talk to the finance minister and ask him about, Bank of Canada. Does the finance minister speak to the Bank of Canada? And he told us that he does on a regular basis. I just wanted to get his ideas as to what the Bank of Canada has been doing. Does he agree with all these interest rate hikes? And what are his thoughts on how the Bank of Canada is functioning right now and raising rates 10, 11 times in the last couple of years? Does that make sense? And what effect is it having on Ontarians?
My take on the Bank of Canada is they have a lot of inputs. They get data and evidence, but they do talk to a lot of people to get a sense of what's going on. And I think as a politician, they're independent, but I think also I'm sure people always want to hear what the condition on the ground is. And that's where Doug Ford and our government are very good, talking to people all the time, where they're hurting, what's really impacting. And clearly these higher interest rates, the fastest rise, I think in Bank of Canada history, 10 increases to 5% now. I think prime is over 7%. It's having its effect. We're feeling it on the ground. People who are refinancing their mortgages, people who are paying increased costs for food and for rent and other inputs. So people are feeling it at a time when there is all this uncertainty. So you'd have to ask the Bank of Canada. I did write the Minister of Finance about the Canada Pension Plan, and because I thought that's very important that we talk about to provide stability where Alberta Pension Plan wants to leave the Canada Pension Plan. And, people work in Alberta and then they retire in many parts of the country and vice versa. So And I think it's important that at this time we think about the hardships that people have, the uncertainties they have, and do everything we can to help them.
Patty Levitt-Reid, a friend of mine, Patty and I have worked together for many years now. Some of you may recall, Patty was the chief financial commentator for CTV, and she was on BNN for quite some time. Prior to that, was vice president over at TD Waterhouse, TD Bank. And I've had the pleasure of having Patricia Levitt-Reid on our show, I guess I said a few times now. And I think when you go back over the last year, there's been a lot of confusion as to what the Bank of Canada was going to do, still is going to do going forward. Will they ever raise rates again? Will they begin to lower rates next year? And so I posed the question back a few months ago to Patty, saying if she was the Federal Reserve or the Bank of Canada, would she raise interest rates? And interesting enough, she actually flipped the question back on me. But let's see what she had to say. Based on the inflation rate that we just received yesterday, do you think the Bank of Canada has another interest rate increase up their sleeve before the end of the year? And if you were the Bank of Canada, or the Federal Reserve for that matter, would you raise rates again before the end of the year?
Yes, I would. Different central banks. I think the U.S. Federal Reserve has done a really good job. They telegraph. They pretty much always follow suit. Not a lot of surprises, unlike the Bank of Canada, who have been known in the past to surprise us. But when you see an inflation rate of 4%, when you look at mortgage servicing costs up 30%, rent 6%, goods as well as services higher, even if you strip out the volatile components, which would be, of course, energy and food, we're still in August, it's 4.6%. And so if you believe in that 2% target, and if you want the Bank of Canada to have the credibility that it is striving for, the odds went higher on October 25th on the next rate announcement. We could see another 25 basis points.
As I said, I know Patty mentioned or said that she would raise interest rates one more time, and flipped the question around and asked me what I would do. And I actually said I would not raise rates. And I guess now looking back, the Bank of Canada did not raise rates anymore after our meeting. And so quite interesting to our conversation. I know that Patty and I go back and forth a number of times on economic topics. And in this case, I guess I was right this time. Not often I'm right. Usually Patty's right. So it was good to be right, and good to be right for all of us, right? Because we don't want interest rates rising anymore. I'm pretty sure of that. And so this was just a glimpse into the quality of guests that we've had on our show in 2023. As I said, we couldn't put everybody in this little package here to show all of you, but just wanted to show those that are watching today that this is the quality of guests that we strive to have. This is the quality of guests that we look to have in 2024. So as we turn the clock and turn the calendar, I should say, to 2024, I look forward to bringing you more guests with different points of view on different topics, and making our show as interesting as we can make it, hopefully answering many of the questions that viewers have. And as always, if you have any questions regarding any of the information our guests are discussing or presenting, feel free to send me an email, give me a call. I can always go back to our guests and get some clarification. So once again, I want to thank all our guests for coming on our show in 2023, and I look forward to a fantastic lineup of guests in 2024. Now we come to the part of the show where I believe, when I actually talk a bit about what I believe is important for individual investors to consider over the next couple of weeks, and at this point in time into year end, before they make their investment decisions. I think you should be watching some economic data. We've had a lot of economic data come out on the calendar, a lot of it in the US, some of it in Canada. I think you also want to take a look ahead to the markets in 2024. I think if you're making investment decisions today, you want to make those decisions based on how you think things are going to go in 2024, at least the beginning of 2024. And lastly, I think you also want to take a look at stock valuations. What are certain investment ideas trading at? Are they getting a little expensive? Are they still cheap? What are these valuations for these investment ideas? And I think those are the three things you want to consider. So let's take each one on their own at one at a time. Economic data. Now, we've had a lot of economic data recently. We've had a jobs report out of the US, most recently this past Friday, still fairly strong jobs growth. We have jobs growth out of Canada, again, fairly strong. We've had CPI data or inflation numbers come out of the United States yesterday, showing that inflation is coming down a little bit. Tick down from 3.2% to 3.1%. We had PPI, Producer Price Index, which are your wholesale prices, also showing some weakness in inflation just this morning out of the US. So here we have a chart of the US Consumer Price Index, and you can see exactly what I was saying. When you strip out volatile energy and food prices, the core rate is still 4%, so a little higher than the Federal Reserve would like, but the headline number is now down to 3.1. It would be very nice to see a number coming in below 3, something with a 2 in front of it. I think the market would get extremely excited if we started to see numbers in the 2s, because we know that 2% is what the Fed and Bank of Canada, for that matter, are striving for with respect to inflation. The next chart we have here, actually, we can put that one up as well, is the Bank of Canada overnight interest rate versus inflation. And you can see here again that our rate of inflation is also in and around 3.1%. And you can see here that the Bank of Canada rate is significantly above that, 5%. So again, we have, or the Bank of Canada, I should say, has a lot of wiggle room if the economy should continue to slow. And we're seeing it slowing in Canada a lot more than in the United States. I think that the central bank would have enough wiggle room here to bring down the bank rate, the rate that they charge the banks, and then therefore the banks would bring down the prime rate, which is, as we know right now, is over 7%, as the finance minister said in his interview, 7.2% to be exact. So if the central bank, Bank of Canada, lowers their rate, banks will lower the prime rate as well. And things such as mortgages, lines of credit will become just a little bit more affordable right now. And hopefully that would help stimulate the economy. So first thing I want everybody to consider before you make those investments in the next few weeks is what's going on the economic data and how that economic data will affect interest rate policy and where interest rates go in the coming few weeks. As I said on our list there, look ahead into 2024, I think is extremely important, figuring out what the market trend will be heading into 2024 and at the start of 2024. And to me, I think the trend will be to see greater market breadth. Or another way of saying it, I think we're going to see gains in other areas, not just technology like we saw. We know the Magnificent Seven stocks, the largest 7 tech stocks today, made up so much of the gains that we saw this past year. It's making up so much of the S&P 500. Almost 30% of the S&P 500 today are just these 7 stocks. So one of the market trends, or I think the dominating trend for 2024, will be a broadening out of some of the growth into other areas of the market. So not only do we just have to own some good quality tech names, but I think you should own some good quality banks and pharmaceuticals and retail, even maybe the odd sprinkling of some oil names as well. Different areas of the market, I think, are going to join in on the party, or join in the party, crash the party, if you will, and also move higher. We're already seeing it happening right now, November and December, or here we are about halfway through December. last month and a half, we've seen a number of names in other areas other than technology start to do well, especially banks. Canadian banks have moved higher. US banks have moved a lot higher. Insurance names have moved higher as well. So we're starting to see a broadening out. And I think this trend will be very obvious as we head into 2024. A few charts we have to show that we've seen before. Magnificent Seven dominating the market. We've seen these charts, I think, on previous shows. First one, or actually we have both of them there. On the right-hand side, you'll see the Magnificent Seven, or we call them now the Mag 7. We actually make short forms of everything in the financial world. And you can see here Meta, formerly Facebook, Amazon, Apple, Microsoft, Google, or now Alphabet, and Tesla and NVIDIA. And you can see that these 7 companies made up just over 70% of the growth that we saw this year on the S&P 500. The left side there, that chart shows us that these names make up almost 30% of the S&P 500, and it is unbelievable. You know, Goldman Sachs was quoted recently as saying they have never seen this type of concentration ever before in the stock market. So we're living through a time that we've never seen before, domination by these stocks. The third thing that I think individual investors should consider before you make your investment decisions are stock valuations. And I think the best illustration I have for stock valuations is the first chart we have here, again on the Magnificent Seven. You could clearly see that many of the Mag 7 are trading at high valuations, high PE multiples. You're looking at Amazon 50 times, Apple 30 times, Meta, Alphabet in the 20s, which is a lot cheaper, Microsoft a little expensive, 35 times. Look at Tesla, 73 times. Unbelievable. So I think before you make your investment decisions, you want to take a look at valuations. Now, I will say that if a company is growing profits by 40% with a PE multiple of, let's say, 23 times, then I think that actually makes sense, right? You want to buy a company that is showing growth higher than what your multiple is, what your company stock is trading at. And so I think you'll find that names like Alphabet, Meta, two of the names that many people talk about that are still relatively cheap as compared to the growth that we see in these names going forward. Another one is actually NVIDIA. NVIDIA, once upon a time, traded at 50, 60 times earnings. Today, earnings on a forward basis, multiple is around 25, 26. And yet they're still growing well above that. And so for many, NVIDIA has been a name that they've been adding to over the last, let's call it, 6 months or so. Another chart I have here, again, illustrates valuation of the Mag 7. And you're looking at the Mag 7 or the Magnificent 7 versus a lot of the other indices or index that we could see, the S&P 500, S&P 500 equal weight, EFI, which is your international markets over in Asia, MSCI as well, emerging markets. And you can clearly see even an emerging market index trading at 14 times, the Magnificent 7 well above that at 35 or almost 34 and a bit times earnings. So valuations, I think, is so important before you make your investment decisions. So you want to look at other areas of the market, not just the Mag 7 for growth. There are a lot of areas, as I mentioned, in banking and pharma and other areas in retail that I think are pretty compelling. Some valuations are pretty compelling. A lot of these stocks, in my opinion, are trading at pretty good levels, pretty cheap, on sale, and are still showing some good growth. So to me, over the next couple of weeks, I think if you, as an investor, if you focus on those 3 things before you make your investment decisions, I think those are a good starting point to help build out your portfolio for today and over the next 6 to 12 months. (2023), what a year it was. We came into this year on a low point, and it looks like we're going out at a high. The S&P 500 has reached a new 52-week high. we've seen the Dow Jones really move a lot higher in the month of December. Most of the gains have come on the Dow or for the Dow in the last month and a half. Even the TSX has shown a little bit of appreciation. The index has moved higher in the last couple of months. But when I look at the highs and lows for 2023 and some of the things, some of the highlights, what has stood out, some of the high points, some of the low points, well, you can't help but to just talk about technology in general. And we have a graph and a chart that I've shown a few times on the show. It is the Invesco QQQ. So basically an index that shows technology and how well tech has done. The NASDAQ has done. NASDAQ is up currently about 39% in 2023. Unbelievable. 39%. If I told individual investors that the NASDAQ would be up almost 40% this year, the start of the year, they probably thought I would, I'm a little crazy, but that's exactly what has happened. So the worst performing sector last year has been by far the best performing sector this year. So a high point for 2023, technology. And so what has been a bit of a low point this year? Well, as I've said already, I think the Dow has been a bit disappointing, although I guess we can't really complain now. If we take a look at a Dow Jones chart, you'll notice, look at the gains that we've seen in the past month and a half. The last 2 months, the Dow is caught on fire. It has been doing extremely well. And I'm looking at my notes here, the Dow's up 10.5%. So I guess, you never know when the gains come. You had a tough year, or first 10.5, 11 months of the year, been challenging. And in the last month and a half, the Dow explodes to the upside. And that's why you can never time markets, right? We can never time markets. We never know when markets are going to surge higher. And that's why it's time in the market, not necessarily trying to time the market. But up until the last couple of months, the Dow's been a disappointment. It's been a bit of a low light, not a highlight. And moving to the TSX, we have a chart on that. That's probably been even more disappointing than the Dow. We have seen it pick up in the last couple of months. It was actually near an annual low at the start of November, and things have picked up. But again, you're looking at the TSX up about 4.5% for 2023. So for those that have had a lot of stocks or investments that are trading on the index, or owned a mutual fund that have stocks that trade on the index, whether it's Canadian banks or utilities or real estate trusts or technology or anything that you've had that has traded on the TSX, it's been a bit of a disappointment. So for me, I guess the highlights by far are technology, the Magnificent Seven stocks. They've really come and have taken this market to highs that we haven't seen in a few years. Not all-time highs yet, but definitely 52-week highs or 1 year, 2 year highs. And the disappointment has been really everything else. The other 493 stocks that trade on the S&P 500. So it's been a year that I think can be very easily explained, and one that I think that heading into 2024, as I've already said, I think we're going to see a broadening out of the markets and better market breadth. Canadian banks, oil, and gold. Banks, oil, and gold have made up the majority of the TSX for a long time now. If you take a look at those three sectors, you're probably looking at 70 to 75% of the index are just those three sectors alone. And so very easy to explain. If the TSX is down on a certain day, it's probably because two of those three sectors are negative. If the TSX is higher, it's either because all of them are higher, or maybe two out of the three are higher. And so I thought we'd take a look at these three sectors in particular to see how the TSX is doing. And we already know, as I mentioned to you in the last segment, TSX is up about 4.5% year to date. Well, whereas a lot of that are those gains, where have those gains come from? And we know a lot of those gains have come in the last, I guess, month and a half or so. So let's take a look at a bank chart, Canadian bank stocks, and you could see that bank stocks have been on a bit of a run. We know banks in their most recent quarterly report, they didn't really report the best quarter. They also didn't report the best outlook going forward. Canadian banks are going to do as well as the economy in most times. If the economy is slowing down, if banks or if individuals are unfortunately defaulting on their debts, businesses, more defaults out there, banks are going to feel it, right? They're setting aside more money for credit losses, for potential bad debts. We're not seeing as many people borrow to buy a house, borrow to expand their business, because interest rates are just too high in this country right now, over 7% prime rate, as we said earlier. So banks have struggled. However, there's always a however. We know that stock market looks 6 to 12 months at the very least in advance. And if we believe that the Bank of Canada has stopped their interest rate hiking policy, that they're not going to raise rates anymore, and that the Federal Reserve will also not raise rates anymore, then a lot of bank stocks, I think, should fare quite well. And so what investors do is they start buying up the banks because they're paying such great dividends, but also because they could represent really good value in the future and could do well 6, 12 months into the future. And so that's why you're seeing bank stocks start to rally as of late. But again, bank stocks are just coming off low points, many of them trading single-digit PE multiples, which is low for them. And overall, banks are coming from a spot right now just off their lows. Moving forward to oil stocks now, or oil in general, the oil sector. And we can show the chart of oil. And you can see oil has really fallen off in the fall and as we've headed towards year end. Oil, actually, here we have it at 71.82, but I can tell you, price of oil, WTI, is actually below $70 right now. So whereas banks have seemed to bounce off the lows that we saw in the fall and month of October and has now started to move higher, we haven't seen that with the price of oil as yet. And so, yes, oil stocks have not fared nearly as well as many people had hoped coming into 2023, and as many people have hoped that they would fare towards the end of this year. And I think a lot of that has to do with, the OPEC wanting more production cuts. Some of the OPEC nations didn't agree with that, so they weren't able to increase the cuts. The production cuts that they have in place right now, the Saudis, the Russians, they remain in place, and they'll remain in place at least for the foreseeable future. But the United States is picking up the slack, plain and simple. Whatever production cuts we're seeing out of some of the other OPEC nations, the United States is producing the most oil out of any country right now, over 13 million barrels a day, whereas the Saudis now are down to under 10 million barrels a day. So when you think of oil production powerhouse countries producing oil, you got to look at the United States now. They're producing more oil than anybody else. And I think that is a big reason why we're seeing oil at the low points as we head into 2024. Lastly, the third sector, you can show a chart on this one. We have gold. Now, gold is total opposite of oil. Gold is at all-time highs, or just recently reached all-time highs, well above 2,000 an ounce. Why is that? Well, usually when gold moves higher, we find that the US dollar is struggling. And as many people believe, if the Federal Reserve is done raising rates, we've seen the US dollar pull back because of that. Higher interest rates usually means that people are putting more money into US treasuries, and the US dollar moves higher with it. Well, as we move into 2024, we all believe, and we'll see later on this afternoon if the Fed holds pat, but we believe Federal Reserve will not be raising rates any longer. And in fact, at some point, will cut rates in 2024. There are many people believe that we could see a mild recession in the US in 2024. So this is all affecting the US dollar and causing some uncertainty. There's uncertainty in the Middle East right now, uncertainty still, Ukraine-Russian battle, war in the Ukraine. And so a lot of that has helped the price of gold, because as we know, price of gold moves higher when there's uncertainty in the world and people are fearful. So when I look at buying any of these three ideas, gold, oil, banking today, you probably know what I'm going to say. It's banking. I believe that I'd be a buyer of the Canadian banks, maybe not a buyer of gold at these highs, perhaps maybe want to, for a diversified portfolio, perhaps own some good dividend paying oil stocks just for a small portion of a portfolio. But I'm a big believer in our Canadian banks. I'm a big believer in the US banks. And I think if you put your money there, I think over the next 6 to 12 months, that sector will fare very well. So I wrote here, or we have here on our screen, three ideas that potentially, and I say potentially, could derail the momentum that we're seeing in the stock market, the economic momentum that we've seen to have over the last, let's call it 6 weeks or so. And here they are right there. Central bank policy affecting interest rates. We know central bank, the Federal Reserve will set policy in, I guess, just over an hour and a half from now. And that'll be their last meeting for the year to set policy. But what are they going to do in 2024? Stock market valuations getting too high. We talked about valuations earlier on the show. I think if stock valuations get higher and higher, that will be a negative and could derail some of the momentum in the stock market. And the third thing I put down on our list as a top three, part of the top three, are geopolitical events, the US election. And so I wanted to touch a bit on that as well. So let's speak about the first one, central bank policy affecting interest rates. And a chart we've had up on the show a few times, Fed funds rate increases since 2022. You can see many of them here. You can see also, and more importantly, the last 3 out of 4 meetings, there was no increase. That's big because that tells everybody that the Fed is on hold. And many people believe that the Fed will be on hold in 2024. So I think with setting policy, it's not so much we're worried about interest rates going higher. I think it's more, when will interest rates come down? When will the Fed and Bank of Canada decide to lower interest rates? And I think that is what I mean when I say central banks setting policy that will affect interest rates. When will interest rates come down? We know they were too slow to raise rates. Will the central banks be too slow to lower rates? We have our next chart here, which is a Bank of Canada policy interest rate, where you can see the number of times that the Bank of Canada has raised rates. And again, this is something that as we move forward, will the central bank, our central bank here in Bank of Canada, will they lower rates, and how soon will they lower rates in 2024? Definitely will affect the stock market. Stock valuations, stock market valuation. I have that as second on our list as a potential to perhaps derail some of the momentum with the stock market. And we have a chart here on PE ratios, S&P 500. You can see a huge spike in the chart here in 2021. We can put up that chart. There it is. And it comes almost crashing down again into, I guess, more manageable and better levels. And as you can see in the right side of this chart, valuations are starting to tick higher again. So will valuations get ahead of themselves? And obviously with interest rates at these levels, it's easier to get ahead of yourself. If we start to see interest rates pull back, if the Fed and Bank of Canada start to lower interest rates, it will help stock market valuations a lot more. The third point, or the third thing I wanted to discuss briefly, is this idea of geopolitical events or geopolitics and the US election. And, unfortunately, a lot can happen if the war, for example, in the Middle East were to expand, if the war between Russia and Ukraine were to expand, if we were to get some new event pop up, geopolitical event arise, it definitely can affect the stock market for a very short period of time. We have a fantastic chart, one of the last charts on the show today, and you can clearly see here, we can put that up, the impact of war on the markets and or really any negative event on the markets. You can see here, the one at the bottom is COVID pandemic and how long it took our markets to get back to where they were prior to shutting down for COVID. 4 months. Can you believe that? It felt like forever, but the stock market rebounded a lot quicker than the economy, and most of us did. And you can see here everything from the Korean War, Cuban Missile Crisis, to the financial crisis, to the 1987 stock market crash. You could see how long it took for the stock market to recover, but it always recovered. Sometimes it took a little longer than others, but overall, the market always recovers and moves higher than it was prior to that event happening. So I guess my point is a geopolitical event, a new event, or something to do with the current events that are going on could derail the momentum for a short period of time, but over the long term, I think you're going to be just fine. And lastly, we have a US election coming up in 2024. I think no matter who is elected, usually we see the stock market go higher. And we have a chart to show this as well. Stock market always moves higher in an election year. But of course, depending on which party wins, it looks like here, if you look at the numbers, Republican wins, market goes up a little bit more than if a Democrat wins. If a Republican replaces a Democrat, you can see how much the stock market goes up. If a Democrat gets reelected, how much the stock market goes up, et cetera, et cetera. So there are a whole bunch of statistics, and you can see on the right-hand side all the different presidents and how they fared, how the S&P fared when they were elected. Some of them, unfortunately, took office at a time that was challenging during a financial crisis or something along those lines. So sometimes it's not about the president, it's just a matter of timing, I guess. But overall, geopolitical events, the US election, could derail the momentum of the stock market. Hopefully it doesn't. Hopefully the market is happy with whoever is in the White House come, I guess, 2025 when they take over the office and is elected in November 2024. But overall, those three things, in my opinion, are three things to perhaps look out for as we head into 2024. Now, the part of the show that I like most, I get to answer questions. And of course, this show, we've had a lot of information packed into it. So I think I only be able to get to one question today. And I see one here on TFSAs. What is the yearly amount you can put into a TFSA? What is the deadline? And is it a good idea to put into a TFSA versus RRSP and have the limits change for 2024? So a lot there, but I can get to a lot of that pretty quickly. So what's the yearly amount? 2023, $6,500. The amount will go up to $7,000 for 2024. So for those that are looking to contribute to their TFSA, it will be $7,000, which means that the lifetime contribution for a TFSA, had you been 18 years of age starting in 2009, would be up to $94,000, in and around $94,000 that everyone could put in. Husband and wife, you're looking at almost $200,000 now that you could put in to a TFSA, invest it, and whatever it grows to is tax-free. So a very powerful type of an account, in my opinion. Should you invest in a TFSA versus RSP? I think it comes down to whether you need a tax deduction or not. If you need a tax deduction, RSP makes more sense. If you want to invest money tax-free and be able to have access to it without paying any tax, then the TFSA makes more sense as well. And as I said, how the limits change, yes, they'll be going up by 500 in the new year. So with that, we come to the end of our show. I hope everybody liked our segment on our past guests, our interviews. As I said, I look forward to some more great interviews in 2024. I want to thank all of our guests again for being on our show this past year. And I look forward to being with all of you again in 2 weeks on December the 27th at 12 noon. And until then, happy investing.